Good afternoon, traders and investors. Will back here with another one, coming to you with a Sunday video, guys. And it's that time of the week again where we go over the top 5 options plays for the upcoming week. Hopefully you guys had a very nice weekend so far. Now, in today's options plays, guys, keep in mind that all of these options plays are going to be for selling options, more specifically for selling put options as part of the larger wheel strategy that I like to run on the channel. It's a very easy strategy to run, guys, whether you're a beginner, intermediate, or even advanced investor. It's a strategy that's allowed me to collect over 75% annualized ROI in 2023 on the channel publicly, over 60% annualized in 2024 also on the channel publicly, and to start off this year we're sitting at roughly a cool 9 to 10% in gains already for the month of January. It's a very easy strategy to run, guys, usually very consistent, highly profitable, and not that much of a risky strategy to begin with, so long as you respect the strategy rules. So in today's video we're going to go over a few key things together. Number one, we're going to be going over the expectation for the week. We know that with the Trump tariff news over the weekend and with corporate earnings and some macro news releases as well, we know that it could be a quite volatile week. So we will be preparing for that in a little bit of a segment early on in the video, just to give you guys a glimpse into what we can expect for the week and possible levels of interest that we're going to be looking at on the SPY and the QQQ as well. Thereafter, guys, we're going to go through a bit of the strategy rules for the top 5 options plays, and then of course get into the actual top 5 options plays. I have a few bonus plays for you guys, but since we have a heightened week of volatility, we may want to be a little bit cautious on the stocks that we choose for this strategy. Now keep in mind, because of the big volatility event, it may just be a good week, if ever you're not comfortable with the markets, guys, to just sit on your hands. We are currently sitting at very elevated levels on the SPY and the QQQ, very close to the all-time highs, so we can drop a significant amount before we start seeing a lot of buying pressure from oversold conditions. So keep that in mind, guys. It's going to be a very hectic week altogether. So if you just want to take a little bit of a break, or wait for the market to come into deeply oversold levels, into levels that you prefer, that is a perfectly understandable strategy. So with that introduction out of the way, guys, let's jump into the market previews for the week. So if we take a look at what happened after the Trump tariffs were announced, guys, crypto since yesterday has been getting absolutely washed. Here's the crypto list right here. Bitcoin has been down over 6% in the last few days, 7% almost. Ethereum and all the altcoins falling off an absolute cliff. So it stands to argue, guys, that when the futures markets open here in just a few short hours, we are probably going to go down in a very big way for the Monday open. I would not be surprised on Monday if we have a 2-3% day down on the SPY and the QQQs, and that is just the early start to the week. So keep in mind, guys, that things can get significantly worse before they possibly get better. I'm not calling for an absolute market crash, but can we have a quite decent correction here over the next 2 weeks as the markets price in the impacts of these tariffs and the retaliation from other countries? Yes, absolutely. If you take a look at the SPY right here, never confirming the daily uptrend. And if we lose this level down here, 594, that is daily downtrend. We're heading into weekly consolidation. And the next big level of support for the SPY is only down here, 585 down to about 580. That would be from here, guys, a drop of roughly 2 to 3%. We can clear that in literally 2 days if the markets are really bad. As a result, be very patient and be very cautious with your trades. The bulls still do control the longer time frames here, but if we do come down here into the 580 level, it is going to start testing some very large levels of weekly support and also could undo the entire weekly momentum rally that we've had and possibly send us even into monthly consolidation. I do not want to project too far. I'm just giving you guys the possible scenarios for the next coming weeks. And overall, guys, it's best to be cautious when times of uncertainty are quite high. The same thing can be said about the Qs, guys. The Qs never confirming the daily uptrend. Only a retest of the highs, and if we lose this level down here, 510, that would be a daily downtrend, and we would be retesting some of the weekly lows even further, possibly 500 down to about 495. Max pain levels is lower than that, though. That's probably in the 480 range. So these markets can come down a lot, and they would not even be down that much from the all-time highs. If we clip into the first level, only 7-8% drawdown. Clip into the second level over the next few weeks, that will be about a 10 to 12% drawdown, similar to what we had recently in the month of July into August as well. Keep in mind, the December drawdown since Powell and everything, all the volatility through January, that was only 7%. So can we do another 7% down from here and clip below 500 on the Qs? Absolutely, guys. As a matter of fact, that should be your expected baseline scenario. Anything better than that, fine, perfect, but at least you are pricing in the worst possible scenario and you're going to be slightly conservative on your trades. I'm still a big fan of buying dips in this market, but where most people lose a lot of money is they go too heavy, too early on the dips, and then the dips keep on dipping, and then you get really, really nervous because you're out of buying power and you have maximum allocation. So do not do that. It is better to be a lot more patient than not in times of uncertainty, guys. It is not every day, every week that we see some very big tariffs that could potentially be here for the next 2, 3, 4, 6 months type of thing. So you may as well just wait it out and let the market volatility do its thing and let the market come to you, guys. If you want to remember one thing from this entire preview here, it is let the market come to you. Now, that is only because of the tariffs, but not only that, we have a ton of catalysts this week. Tomorrow, ISM manufacturing PMI. If this comes in weaker than expected, it's definitely not going to help the market momentum. Thereafter, we have JOLTS jobs openings reports on the Tuesday, ADP private employment change on the Wednesday, and then the big one, guys, the non-farm payrolls, public employment results on the Friday session. We know the market's been putting a lot of emphasis on the jobs reports as of recently. If any one of these comes in less hot than expected, or less good than expected rather, the markets are not going to like it, and especially in an environment where tariffs are probably going to start off the week negative. Any more negative news, guys, is just going to accelerate any moves to the downside. So please keep that in mind. As well, we have a massive week of earnings. Palantir, PayPal, Spotify, AMD, Alphabet, Chipotle, just to name a few. Uber, Qualcomm, ARM, Walt Disney, Novo Nordisk, just to name another few. And on the Thursday session, a huge healthcare player, Eli Lilly, Amazon, Elf Beauty, Cloudflare, Fortinet, some of the cybersecurity plays coming in overall. So just be careful overall this week, guys. There is something for everybody. However, with these earnings, with the macro news releases as well, and with the tariff news, it may just be a good case to be a lot more patient than you usually are. Regardless of which strategy you are running, guys, you do not want to buy the dip too early and too heavy. You want to be going progressively and saving your buying power as you move along through these levels. Build yourself a watch list of stocks that you are willing to buy, levels at which you're willing to buy them at, and be somewhat conservative and let the markets come to you. So all that being said, that is it for your introduction. Now let's move into some of the strategy rules, and I'll be flying through these this time. I know I say that every time, but now I'll actually be flying through them, guys. If you haven't seen my 30-minute video on the strategy, I'll leave it down below in the video description. It's a free video. It goes a lot more in detail into the strategy here for selling put options into the market. So right now, we'll just move through these pretty quickly. So selling puts, what exactly is it, guys? Very simple. Just think of it as a buy limit order that pays you. If I want to buy NVIDIA down here in the lower $100 range, there's two ways I can do that. Either I set a buy limit order, but if the market never comes down there and I don't get filled, I don't get any shares, I don't make any money whatsoever, and that just ends there. That is where short puts come into play, guys. Short puts are a way, it's a buy limit order that pays you. If I want to buy NVIDIA down here at 105, I can go on the options chain and pull up the NVIDIA 105s for the Friday session. And you guys will see that at 105, if I were to choose to write these puts, well, I would be collecting 74 cents for doing that. Meaning if NVIDIA closes below 104 or 105, I get to collect $74 or 74 cents per share. It reduces my average cost. If the market ends above 105 by Friday, then I get to keep the $74 in my pocket and I do not have to buy the shares. That's why I say it's a buy limit order that pays you, but pay special attention, guys. I say it's a buy limit order. It is predicated that you have to want to buy the stock in the first place. So number one, what we do is we build a watch list and we filter by red. I am only ever interested in companies that open a day to the downside. It'll all make sense when you go through these rules. Number one, high quality companies or high conviction companies only. You have to not mind being assigned the stock at the strike price, guys. This is where everybody gets it wrong. You use strike prices that are too high, or you get into companies that you do not like. You're just going for it. You're just going into them for the premium. Do not do that, guys. High quality, high conviction companies only at a level that you want to buy the stock. Let me repeat that. At a level that you want to buy the stock. Do not get seduced by the premium. Don't start writing put options too high and then complain when you get assigned and the stock ends up all the way down there, okay? Now, number two, we want to find stocks in a monthly uptrend or a long-term range. This puts the odds on our side of not being assigned. Number three, the company needs to not have any earnings this week. If you see a company that has earnings this week, guys, do not start writing puts on it prior to earnings. Earnings are a very volatile event. We see it all the time. Companies can post very beautiful numbers and still go down 10-15%. So if you don't want to get trapped and have any outsized losses, do not write any put options on companies that have earnings this week. Number 4, we want to be targeting stocks that are in a support area or an area of breakout retest. A large support area could be something like this. It is a very clear level, 2 years of support. You can use that as a decent area to start farming some premium. A breakout retest trade on the flip side is known as the trend continuation trade. You can see the top end of the range of resistance here. We break it to the upside on the weekly time frame, retest this resistance as support and run. This retest location is a very high probability trade. So all the trades you see me take on the channel for the most part are going to respect one of these two criteria, a support or breakout retest. Now, number 5, we want to be writing at or lower than the expected move. If you do not know what the expected move of a stock is in a given week, just go to barchart.com, type it into Google, bar chart, and then whatever stock you want to look at, let's say it's Google expected move, you'll come to this page right here. You'll see the expected move for NVIDIA this week is roughly 6.62%. The lower end of the move is 112. So we want to be always targeting short puts below the expected move. It puts more odds in our favor of not being assigned. Number 6, we want to be writing on a red or flat day as well. It stands to argue if you want to be writing under the expected move, well, the stock needs to open red. If it opens up green and is too high, we will not be able to write below this expected move. So we only want to be writing stocks that are red on the day. Number 7, we want to be writing between 0.5% and 0.75% in weekly premium. This is your take-home pay. This is the ROI of the strategy, guys. After running this strategy very successfully for the last 6-7 years, this is the sweet spot between still making a decent amount of money and having a low risk of having to buy the shares. It is a sweet spot, in other words. So that being said, if you want to know what this rule means, I'm looking for 0.5% at the strike. So a very easy way to do that is you take the strike price, divide it by 2, and that should be your weekly premium. And that should be the 0.5% rule, right? So let me explain again. If you want to write puts at NVIDIA at 100, you need to see 0.5% on the bid. You would need to see half of 100 in cent increments here. So as such, you would need to see at least 50 cents. If you want me to do the math, 0.50 divided by 100, there is your 0.5% rule. As we can see right now, the 101s are indeed respecting that rule or very close. If we always stay at the 0.5% rule, guys, it is a good spot between a low risk of assignment, but also collecting decent ROI. If you're always making 0.5% per week at minimum, no compounding whatsoever on your capital, you should be making roughly 26% per year annualized, which is far better than the average annual S&P 500 rate of growth. Now, number 8, we want to take profit at 90% of the contract value, guys. If you write an option on our Monday or Tuesday morning, and by the Wednesday afternoon, it is almost worthless, meaning you've achieved 90% profit, you may as well just close that contract and go shopping for a new play. This is just to be capital efficient and not round trip any gains into the end part of the week. And lastly, if we are assigned, guys, we want to be writing covered calls. So the short puts are a way to buy into a stock cheaper than where it is right now. If we have to buy the stock thereafter, how do we get out of the stock? Well, that is when we write covered calls. This is a buy limit order under the stock. This is a sell limit order above the current share price. We want to be writing covered calls at 0.5 to 1% in weekly premium for ROI. Same thing, just go on the options chain when you're looking for covered calls. If you see 0.5% at the strike you were assigned, perfect, you can fire off the trade. Thereafter, guys, we want to be writing at the assigned strike price or one strike higher. If I get assigned NVIDIA at 105, the following week, I'm writing covered calls at 105. The only exception to that rule will be if I get assigned NVIDIA at 105 and the following Monday, the stock gaps up 5-6%, I may choose to write a few strikes higher and benefit from that share appreciation. But usually 99% of the time that I'm assigned on things, I'm always writing at my assigned strike price. So that is it for the strategy rules, guys. Hopefully that was educational for you. Now let's move into the top 5 options plays of the week, shall we? So stock number 1 is going to be NVIDIA. And I will preface all of these plays, guys, by saying go very conservative this week and be dynamic with your strike prices. What do I mean by that? We know that NVIDIA is probably going to move an absolute ton. The expected move is 112, but in all reality, can we go all the way down here this week? Yes, and I would not be surprised. As a result, we want to be targeting way below the expected move of 112.12. So you can see right here from the options chain, right? We were seeing that the 0.5% rule on NVIDIA was at 101. That is deeply, deeply below the expected move. However, if NVIDIA, for some reason, and it's very possible, if they drop, guys, 4, 5, 6% on the Monday morning, all the way down here into the 108, let's say, right? You have to be dynamic with your strikes. You'll then move down even lower. Think of going into the mid $90 strikes. So this is going to be a moving target this week. If we open very red on NVIDIA, there's going to be some extremely juicy premium down here in the mid 90s, which is relatively close to our large area of support, which is roughly 105 all the way down to about $95. Get as low as you can possibly go, guys. These are your shares, so you may as well want to buy them as cheap as possible, right? So that is a trade on NVIDIA that I'll be targeting this week, guys. Not even close to 112. We are going to be going way, way, way lower. I'm going to possibly wait for the mid $90 strikes to free up. And as a reminder, you need to see at least 45 to 50 cents at the mid 90 strike to free up those trades. If NVIDIA somehow goes down 10% tomorrow, you drop the strikes even lower. If we come all the way down into 107 right away, and you can find some premium down there, guys, at the $90 strike for 45 cents, then we're going to do those. Go as low as possible because this market volatility is not going to go away in the snap of a finger, like the DeepSeek news went away last Monday. The tariff news is a little bit stickier. And as the week moves on, you have so many different earnings, and also you have so many different jobs reports to contend with. So you may as well go for the lowest possible price and give yourself the best margin of safety. That is it for NVIDIA. I still love the company, but the company's been hit left, right, and center recently, guys. As a result, I think it is a buying opportunity, but we have to be very patient because we know NVIDIA can be extremely volatile. Now, stock number 2 we're going to be looking at, guys, is going to be a pair of financial trades. Number 1 is going to be SoFi. I like SoFi because arguably the financial sector stands to be somewhat the least affected by the impacts of the tariffs, at least in terms of a direct impact, right? So that being said, I do not mind playing SoFi. The expected move on SoFi for the week is 14.93. Good thing for us, that is right into our big area of support, which is this green box, $16 to about $14. That is the last line of defense, as we saw back here. However, SoFi is not immune. It gets caught up in the growth stock narrative. And as a result, if the markets are deep red tomorrow, SoFi will be probably even more red, just as part of the, shock that the market may have on the Monday session. So as a result, even though the expected move is only $14.93, we want to go as low as humanly possible. Think the $14 strikes or even the $13 strikes if they free up. So let's take a look at the SoFi options here, and let's go see what we can find right now. And I'll tell you guys where I actually want to buy the stock if it comes down there. So as we can see at the 14.5 strike, we are getting 10 cents. 14.5, yes, indeed, is below the expected move. But potentially, guys, if SoFi really drops hard tomorrow morning, let's say SoFi comes down 6, 7, 8% down into the mid 14s, we are going to be able to get even lower. Think the $14 strike or the 13.50s. Quick reminder, you'll need to at least see 7 to 10 cents on these bids for it to be worth it for you. But it's in your best interest to be able to buy SoFi as cheap as humanly possible, because if these markets fall off a cliff the next 2-3 weeks as we move through this volatility, guys, SoFi is going to be coming down, and I would not be surprised to see a 13 handle in front of this stock. So you may as well get ready and want to buy it as cheap as possible. If I can be patient enough and find some strikes in the $13 range midway through the week, I will probably go with those, so keep that in mind. Financial trade number 2 is going to be Bank of America. Now, Bank of America is an extremely strong name. They had very good earnings. However, we are not really close to the level that I want. The level that I want here is 43.5 down to about 42. This is the most recent level. They broke out from here, they broke out from there, and now we're going to be able to use it as some support. Bank of America has done a good job holding up this 26 EMA since we started the rally in October, November of 2023. And as a result, I want to be playing the retest of this 26 EMA, and it has confluence with our horizontal support zone. That being said, that zone down there, $43.50 to $42. As you can see, though, the expected move for the week is only 45.25. So the market is not pricing in the expected move that I want to see, which is why we need to be patient. Keep this one on the watch list. And if we have 2 days of downside, or if the banks react negatively tomorrow as well, we might come below the expected move, and it may just free up the strikes I actually want, which is 44 down to about $42 on Bank of America. So if we take a look here at the options chain, you will see that because the expected move is slightly elevated, we are not going to get anything down here in the 44 to 42. Take a look, guys, at 44, there is only 8 cents. Quick reminder, you would need to at least see 22 cents, which is half of 44 in cent increments, right? Always just use the 0.5% rule. Very easy for mental math, guys. Half of the strike in cent increments. You can do the math and double check that, right? 0.22 divided by 44, 0.5%. Very easy way to go through a ton of options chains without having to use delta. This actually factors in delta and implied volatility. The 0.5% rule will be at different strikes on different stocks, but it overall encompasses the volatility already baked into that price. That's why I use the 0.5% rule. So moving on, 44, we can see, guys, there's nothing there. So essentially what I'm saying is we need to see a drop on Bank of America. If you get a drop early week on Bank of America, 2-3% perhaps Monday into Tuesday as well, that will most likely free up the 44 to 42 strikes. You want to be going as low as possible, guys. The 44s are nice, but if they give you some money here, 0.5% on the 42s, 42 to 43s, we may as well go with those as close as possible and as deep as possible into this support range below, which is 44 to 42. So those are the two banking sector plays that I'll be looking at to make some plays on this week. Now, play number 3 is somewhat different, guys. Play number 3 is going to be one stock that, well, potentially has some catalyst into the later part of the week because they have Cloudflare and Fortinet earnings. I think those will be good, guys, and this is going to be a cybersecurity play, Palo Alto Networks. Palo Alto Networks is one of 2 industry leaders in cybersecurity, which is them and CrowdStrike. But what we've been seeing recently in cybersecurity, look at Cloudflare. This is Cloudflare. This is Zscaler. Zscaler also coming off its blows. This is Datadog. This is CrowdStrike. You can see that for the most part. And here is the ETF that I like to follow for cybersecurity. You can see that we are cleanly trending to the upside with decent levels of support. Now, in terms of Trump tariffs, I do not think that Trump tariffs will affect software as a service as much as other areas of the market. So as a result, I want to play these software companies because the tariffs are not on software overall, they are on products more specifically, right? So these software as a service companies, they're going to be highly in demand over the next year or two because of the ever expanding AI narrative and AI landscape. So I think it's a good opportunity to play some dips because they stand to be least affected from the current market narrative, and they have great growth prospects into the future. So we can be confident in buying into this sector while volatility is high. That being said, the expected move for Palo Alto Networks is right here, $178.99. Let's call it $179, but that is too high. I want to be targeting this zone right here, 168 to about 158. It is previous levels of nice support, and that is where the bulls rejected from here back when we had this earlier in the month of January. It is also below the 200 daily moving average for the stock. So that being said, you can see how this stock reacted on the Friday section when the entire market came down. So that being said, if we do get pulled down again this week, I will be a fan of buying, but being very patient for my buys on this one. I'm only wanting to buy the sector leaders, Palo Alto Networks or CrowdStrike. CrowdStrike for me is too high right now, but Palo Alto, if we do come down, that could give us some good entries. So let's have a look on the options chain. Can we possibly find anything in at least the 170 region, low 170s, not up here, down here into support below the 200 EMA? Let's go have a look, shall we? So Palo Alto Networks, you will see that when I pull up the options chain, you're actually not getting bad premium at 175, which is below the expected move. You are getting roughly 0.5%. You can do the math. Just pull up the calculator if you're not sure. 0.88 divided by 175 is 0.5%, as you can see right there. However, 175 is at the 200-day, but is not below it, and it is not actually in our desired target location. So be dynamic with your strikes. If Palo Alto Networks comes down 2, 3, 4% into Monday and Tuesday, and then you find your required premium at 170 or below, that's what we want to go for here, guys. So my preferred strike for the week with some patience, because we need to let the market come into us, right? With some patience, I will be looking for the 170 strike. We need to see at least 85 cents on this bid for it to be worth it. If Palo Alto Networks come down 4 or 5% and opens up even the 167 strike, I will do those. The art of the strategy for this week is going to be trying to get as low as humanly possible while still getting 0.5%. So that is stock number 3. Now, stocks number 4 are going to be a pair of value trades, defensive trades, both in the consumer defensive segment. Now, although consumer defensive plays can potentially be affected by the tariffs, I am going with 2 of the strongest companies in the entire world, which I think are at very decent areas of support. Coca-Cola, I've been bringing this one up almost every single week for the past 2-3 months, and it has been a very decent proposition to constantly play this stock in the lower $60 range. You can see here on the weekly, we are basing out in this previous, very choppy zone, which is a good area of congestion, which now is also a very large area of support. 62 down to $60. You can see how well the bulls have held this up many times through the company's recent history in the last 2 years. And we are trying to do the infamous breakout, retest on the monthly, and then possibly run. Can Coca-Cola be affected by these tariff headlines with some volatility? Yes, but their business model does not stand to lose too much in the process. 25% tariffs are fine, but I'm pretty sure nobody cares if you pay $1.25 for a Coca-Cola or $1, right? The tariffs won't be entirely absorbed by the consumer on this one, but Coca-Cola does still have some okay pricing power and some very decent margins if ever they have to take a hit in the margins, right? One of the strongest companies in the world overall, so I like to play it down here. That being said, the expected move is 62.19. So when we take a look at Coca-Cola options here, you'll notice that Coca-Cola does not have that much volatility. You almost need to be on top of the strike price, right? Take a look down here at $62, which is the expected move. We are only seeing 22 cents. That is not enough. You need to see at least half of this, which would be 31 cents. So it stands to argue we need to be patient enough for Coca-Cola to come down. If they come down too fast, too aggressively, perfect. Maybe we can even get a lower strike. Think of these 61s or maybe even the $60. So what I'm saying essentially is we want to be targeting this area, $62 to $60, as low as we can possibly go while still getting 0.5%. That is everything for Coca-Cola. And now lastly, the second one is going to be McDonald's. I brought this one up a few times on the channel in the last few weeks because I think it represents a very juicy buying opportunity. McDonald's down here, 281 down to about 272. This is one of many areas of an area where the bulls tend to react from. It is the 26 EMA on the monthly time frame. You can see that although sometimes, such as here and such as back there during COVID, we dip below the monthly on the 26, but for the most part, in a bull market, McDonald's does a great job of upholding the 26 EMA, and this has been true for the last 10 years of trading under this stock. So I do believe that now will also be a good chance for the stock to find a baseline of support down here and find an area at which the bulls can build some foundations to then start reversing this market. That being said, if McDonald's gets dragged down, good thing for us guys, we'll be looking to shop down here, 280 down to about 272. So the expected move for the week is 283.57. But similar to Coca-Cola, McDonald's does not move like Palantir. It moves slow, so you have to be closer to the strike price than not to get the desired premium. As you can see with an expected move of 283.57, well, we're going to be looking down here, guys. At the 280-250s, there's not enough money. Half of 280 is roughly $1.40, right? So you need to see roughly $1.40 here. You're not seeing it. Where are you seeing it? At the 285s. But the 285s are too close, and they are also above the expected move. So what essentially I'm saying is we need to see McDonald's come down. If we can see it come down Monday or Tuesday morning, that will free up the lower strikes, and it will free up either the 280-250s or maybe even the 280s if we're lucky. Either or is good for me, as I want to be in this desired location of support. It's a very decent level on the weekly chart. You can't see it too well on the weekly chart because you can make an argument that yes, we have gone a lot lower where times were really rough. This was the big sell-off of October 2023, and here back in June was when they were coming in with lower comparative guidance for their earnings, right? And they also had the E. coli issues that they were dealing with as well prior back then. Actually, this was back then in October, so never mind. So that being said, I love McDonald's, but you got to go with a longer term view on the stock. They've been range bound and accumulating now for roughly the past almost almost 2 years of time. It will come up on 2 years in April. So I want to buy the lower end of these ranges. And if we get a sign, guys, the drawdown is not too bad. It's McDonald's. You know what you own. Maximum drawdown is possibly down here into the 260 range, but I would not be too nervous about being assigned the shares of McDonald's more so than other companies, right? And now stocks number 5 are going to be a pair of big tech names. Why big tech? Because I think that big tech should do very well in the grand scheme of where we stand in the overall markets. Yes, tariffs are coming, but we also know that Trump will be implementing some lessening of regulations for American companies in the business market, and also a reduction of corporate taxes. These two things will favor the biggest companies, American companies on the planet, and one of them is Microsoft, of course. So that is why I do not mind if I get assigned shares of Microsoft into the current landscape. That being said, I know it's an expensive trade. I will give you a cheaper one in a few short moments. But for those of you who have large accounts, I think that this is a, once in a very rare opportunity to pick up this fantastic stock and write some options on it. That being said, Microsoft is coming down now. Prior support range, which is 405 down to about 390. The expected move for the week is 405.60. Lucky for us, that is literally exactly into the support range for Microsoft, a support range they've been holding up for the last year and a half of trade while improving fundamentals. Microsoft is one of the most solid companies in the entire market, and definitely not one that I mind being assigned at such a very attractive level. The expected move, 405.60. Let's go shopping and see if we can find anything below that expected move on good old Microsoft. So let's pull up the options chain and we'll go shopping together, guys. So Microsoft down here, we're going to be looking at the 405, and you can see that, as a matter of fact, we are getting roughly 0.5%. Half of 400 roughly is about 200. So you should be looking for $2 on the bid. Lucky for us, we are getting exactly $2 on the bid. However, if Microsoft, as with the rest of the market, has a red day tomorrow and comes down already into maybe 410, 409, 408, 407, you will be able to get even better. Think the 400 strikes, or maybe even into the 390s. As low as you can possibly get, guys, while still getting roughly $2. If you're a little bit under while being more conservative, that is completely fine. You'd rather be more conservative than not in a given week like this. So keep that in mind, guys. I already have short puts for a month of time on Microsoft at 415, and I do not care if it declines even more. I am happy buying the shares overall in this level, but with my large account, I will be shopping for even more Microsoft this week if we tumble a little bit further. So I will be buying the dip with you guys if you just wanted my confirmations as well. And the second stock is going to be Google. However, big asterisks right now. Google has earnings on the Tuesday after the close. This trade is only valid for Wednesday morning. Do not start writing Google puts Monday or Tuesday, guys. Heed these warnings. These earnings are going to be volatile. I think Google is going to do very, very well, guys. You guys have seen what Wall Street has done to these companies when guidance isn't pristine and perfect, and when you have a very volatile market environment, right? The earnings can go down even if the company posts very good numbers. So keeping an eye on Google, guys. The expected move for Google this week is 194.56. That is the expected move with earnings. It's a big move, 6% up or down. If after earnings, guys, Google comes down 6% into this support range here, 192 to 190, I will be looking for either this Friday or the following Friday, right? February, whatever it is, February 14th, let's call it, right? I'll be looking for this Friday or the following Friday if I can find 185 or better. Now, of course, if Google drops 10% and we're already down into 185, well, then, of course, we need to be looking lower, roughly the 180 to 175. But if we only drop 6% after earnings into this zone, then I'll be looking for the mid 180s to low 180s to pick up some Google shares, and I'll be looking for 0.5% for that, guys. However, if Google has fantastic earnings and blasts off to the top, what do? Absolutely nothing. We do not chase. This trade is only live if we drop 6% after earnings and we can get some strikes down here, or if the drop is more, 8 to 10%, and we're already in the mid 180s, then we want to be going 180 and lower, 180 to 175 Either or area, guys, is a fantastic, fantastic buying opportunity for Google, especially when you keep in consideration they are so cheap and they have a long runway of growth for 2025 ahead of them. So those are the top 5 options plays for the week, guys. As you've seen, I have a hint of caution. However, I'm still a big fan of buying top quality companies on considerable dips. So keep that in mind. When markets are volatile, we need to be concentrated into the best companies in the market. It is not the time to be going off on some random stocks here and there. You know that if the SPY and the QQQ maybe are not going to perform and are going to come down, well, all the more risky trades are going to come down a lot more, guys. So don't stray off the path. Focus on the highest quality companies in the market because they stand to drop the least and stand to recover the quickest after this volatility event, which could last maybe the next 1, 2, even 3 weeks, depending on the market's reaction and the market's anticipation to price in the damage of the impending tariffs. So keep that in mind for this week, guys. In terms of the bonus plays, I'm hesitant to give you guys these bonus plays. There are only 2 bonus plays that I would explore this week. I mean, there's a ton I'll give you after earnings here. There are 2 earnings plays that I'm willing to explore this week. One of which is Bitcoin. We know that Bitcoin's come down an absolute ton this weekend, but we have to be very, 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 very conservative for the week on Bitcoin. I will be using BITX, but BITX, guys, I want in the low 40s, only the low 40s. Why? Because that would be mid 80,000s on Bitcoin. That is where I'm willing to buy the dip. Could we see some big volatility into this week? Absolutely, guys. So you do not want to buy the dip too shallow or go too close on your strikes for BITX. I will be looking for the low 40s, no higher than that, guys. So taking a look at BITX right now, you'll notice that BITX, you can get a ton of premium if you are still far away from the current market price. So take a look here for February the 7th. You will see that in the low 40 range, we're not quite getting it, right? Not quite getting 20 cents here. But if Bitcoin drops, and this ticker is not pricing in the weekend action just yet, so it will drop, and it will drop probably to the 50s. That being said, if I can find 42, 41, 40, even the 30s, guys, I will be going for this, looking for 20 cents on the bid. I'm going to go very conservative on Bitcoin, but I do want to play it. The second one is going to be Tesla, but be extremely careful with Tesla, guys. Tariffs on autos and auto parts and retaliation from Canada is not going to end well. A few prime ministers in Canada are talking about putting 100% tariffs on Tesla just to fire back at Elon Musk because he is so close to Trump. So we do not want to be in a tariff war because vehicles, guys, stand to lose the most. That being said, Tesla is currently at a very high valuation, guys. So if really things start hitting the fan, Tesla can drop and can drop significantly. But if we still want to play it, we want to play it very, very, very conservatively. TSLL, I'm willing to play in the mid-teens, 16, 15. Where would that be, guys? That would be a drop on Tesla in 1 week, all the way down here to about 330, 320. That is where I would not mind being writing some short puts, because that would be a top to bottom decline on Tesla this week of 20%. 20%. The expected move is not that, but that is how safe I want to play it this week. I play things more aggressively when the volatility in the markets are less, but when volatility in the markets are more, I want to play things conservatively, guys. There is a time and a place to play TSLL closer to the market, and there's also a time and a place to play Tesla further from the market. This week is definitely a week where we want to play further than not. I will be targeting levels such as $16 and $15 on TSLL. I know it sounds ridiculous. I know it sounds cheap, guys, but you'd rather be safe than sorry. And hey, if I can collect 0.5% at $16, why would I not do that, right? Why would I want to be too aggressive in the mid-20s here when I can, right now, you know, for next week on a drop on Tesla, right? If I can already collect in the lower teens, 0.5%, like 10 cents, 15 cents there, I will definitely do it rather than getting too close to the market and being seduced by this juicy premium, which is just too close for the fact of the matter, right? Those are the 2 extra plays that I'll be giving to you guys. The other bonus plays that I'm looking at this week are every company that has earnings, but after earnings, guys. So I'll give you a few of them. Palantir's earnings on the Monday after the close. Expected move on Palantir is about 12%. If Palantir comes down in a brutal fashion, keep in mind, if any of these earnings plays goes up after earnings, I'm not chasing, guys. There's no trade. But if they come down, there's going to open up a lot of trades. If Palantir comes down 12%, with heightened volatility, with an elevated VIX after earnings. Tuesday morning for the Friday close, you may be able to find some short put opportunities down here, $60. I do not want more than $60. That requires a big move down on Palantir. Yes, it does, but we will be running extremely conservative, $62, $61, $60 for Friday. After earnings, only if the company drops. The second one I'll be looking at, of course, AMD. Google we went over as well. AMD, if AMD stock drops after earnings and comes down to absolutely ridiculous prices in the lower to mid 100s, like it comes down after earnings 105, 104, after earnings, I'll be looking to write the mid 90s for Friday. Notice how conservative I'm being on every single one of these stocks. PayPal for me, unfortunately, it is just a little bit too elevated. But if they drop after earnings down here into the $80 range, I'll be targeting the mid 70s for after earnings for the Friday close. So Chipotle as well. Chipotle is another one. If they have bad earnings and come down into the support level here, $54 to $52, I will be targeting the $50 strikes or 49 or 48 down here for the Friday session. I am going, if they drop, guys, I'm going way lower where I actually want to buy these companies. So Chipotle for me, after earnings, depending how much they come down, if they come down at all, 50 to 48. If they already come down there into earnings, we're going even lower, guys. I'm going to be looking for the 46, 45 as low as possible. Be dynamic with your levels this week and try to get as cheap share prices as humanly possible. Uber, same thing, Wednesday before the open. Wednesday morning, if the stock is down, now that we're into Wednesday, guys, Wednesday, you may have to be a little bit, dynamic with your distances, but not only with your timing as well. So Wednesday, because we only have 2 days left to expiry, if stocks drop on Wednesday, you may not find good premium for Friday. You may need to go 1 week out further. But if Uber drops after earnings and they come down into the big support range down here, $61, $60, I'll be targeting the mid 50s for either this Friday or the following Friday thereafter, as cheap as humanly possible while still getting 0.5% for this Friday or for the Friday following. This is after earnings, guys, okay? Disney, so what I'm looking at essentially, guys, is I'm looking for big support levels. Disney, there is no real support level anywhere close. So even if they do drop after earnings, I'm not looking to play it, guys, because the next big support level, unfortunately for them, or unfortunately for us, because we can't play it, is down here in the mid 90s. Unless we drop into the mid 90s, I'm just not interested in playing Disney, right? So line up the drops with big areas of support, and if they're not there, we don't take them. Qualcomm and ARM, I'm hesitant to play these after earnings. I'd rather just play NVIDIA, but Qualcomm, if they have a big drop there and you like the company, think of playing even lower, the 140s. You want to get as low as humanly possible, guys. And similar for another stock that has earnings later on in the week, Amazon after earnings into Friday, because I won't see you guys, right, on Friday. But after Friday, if Amazon drops a lot after earnings for XYZ reason, and Amazon comes down into the 212, 215 range, this area of support down there, if they come down here, I will be looking to write for the following week as low as possible. $200 around the 200-day EMA. So if Amazon comes down, I'll be looking to write all the way down there. And just like that, you've locked in a possible 18% decline on Amazon if they do fill you down there. So I'm going to be going extremely cheap this week. It goes for Elf Beauty as well. If Elf Beauty gets destroyed after earnings, I don't know what's going to happen, but this is going to be a big move. If they come way down after earnings into the $80 range or something like that, well, we're going to have to go with one of our prior support levels from way back in time at this point, which would be like $60, $70. So if they come down all the way into here, into the low 80s, for the following week, I'll be looking extra dirt cheap, guys, down here in the 60s. I like playing Elf Beauty. It's true that there's not a very big level of support there. It's very temporary support, but down here, it's going to be a question of valuation for me and short-term oversold weekly conditions on the weekly timeframes, and the daily will be absolutely destroyed at that point. So I do want to take these trades. So whichever companies that you're looking for in this entire list, they have to be high quality, high conviction companies for you. Don't play a company just because it dropped after earnings if you don't believe in the company and you don't want to buy the stock. This is only for stocks that you want to buy after earnings. You've been maybe waiting to buy them on the sidelines, but haven't found the good opportunity. Well, this is a chance that if any of these companies you like and you were looking to buy into in the first place, and they have a big drop after earnings, you might be able to write some short puts well below the market thereafter. But this week specifically, because of tariffs, because of volatility, because of macro news events, I most likely will be playing very, very, very few company earnings beforehand. All right. You guys have seen me play earnings beforehand, but I always tell you guys, do not do it. You see me do it, but I'm telling you guys, I have a much larger account than most people out there, and I do have a higher risk tolerance than most people out there as well. So practice what I preach. Do not follow me. You will see me on the channel, most likely write some puts on earnings, maybe into Google, maybe into Uber before earnings, maybe into Amazon before earnings, but I do not recommend you guys do that as well. I've shown you guys the pre-earnings strategy, but this may just be a week, guys, where don't test your luck, okay? I've told you I will be doing it maybe on 2, 3, 4 companies out there, but for the rest and majority, I will be waiting for after earnings, guys. So just be careful this week. Who cares, guys? If you don't find any big plays this week because you're too conservative or whatnot, you'd rather be safe than sorry, because the last thing you want, guys, is to get trapped on some of these plays when the SPY and QQQs are darn close to all-time highs, and we could be seeing a 5, 6, 7% drawdown, which would not be surprising. We would just be essentially looking for monthly higher lows for further trend continuation. But why would you want to get trapped here in the face of monthly consolidation, and it takes a few months for it to actually come back up, right? You'd rather be very patient, sit on your hands, and if we don't drop at all and the markets go to the moon, perfect. There's plays every single week, you guys know that. But at least if you are conservative enough and patient, you might be able to get some of the best levels possible in light of maybe the next 2-3 months hereafter. When we get through this volatility, could be a very good time for the market. So you may as well be patient, guys. You lose nothing by being patient. Do not feel FOMO. There's opportunities every single week. So do not buy the dips too early, and do not buy the dips too heavy either. Go into it a little bit at a time, because as I said, this tariff news is not going to blow over, boom, with the snap of a finger, like we removed the DeepSeek headlines and stuff like that, right? So pay special attention. This week is going to be volatile, so keep that in mind. So that's everything I had for you guys in today's video. Hopefully I didn't sound too bearish. That's not the point. I just don't want you to guys to overcommit in the face of a big red day, because I know everybody's in a buy the dip mindset, but there's a way to buy the dip. You have to do a very calculated and methodical way of buying the dip, right? Look at very deep levels, because you guys know it best, right? The market can always surprise you. If you think it's going to drop, it can drop a certain percentage. It can always drop more. You guys know that. So you may as well factor that into your trades. Buy the dip slowly, methodically, build a watch list, derive levels at which you want to buy the stock. Don't think about where I tell people to buy where I give people levels. No. It's where do you want to buy these companies? That is what's going to keep you alive when you are running the wheel strategy, guys. It's all about finding high quality companies, high conviction companies for you, but at your desired price target. So be honest with yourselves, guys. Do not get too greedy and right too close to the market, and you'll just be disappointed if it goes lower, right? So that being said, that's everything for today's video, guys. If you enjoyed it, consider dropping a like. Would appreciate it for the growth of the channel. Also consider subscribing to the channel if you're new. We do these videos every Sunday in preparation for the market open on Monday. And guys, if you have any questions whatsoever, please feel free to reach out down below in the comment section. Any questions on the strategy, on any stock specifically that you may want to run the wheel on, but you're just not sure, I'll do my best to help guide you down below in the comments. Now, lastly, if you guys want to have access to my trades in real time and see how I trade the wheel in real time with our members in the Discord, the link is always down below. I share all of my trades in the Discord, whether they are their wheel trades. I also do other trades as well. Call options, long-term or short-term, put credit spreads, call debit spreads, share swing trades, long-term portfolio trades, leap options, and so many things in between. These are all the trades since the inception of the Discord. The green check marks are win. The red little circles are tiny losses. I'm always very transparent with you guys in the grand scheme of showing you my wins and the losses. It's been a very profitable last couple of years for us. My trading style is very consistent, somewhat conservative, but it is quite consistent. That being said, I cannot guarantee returns. These trades are obviously for educational purposes and to teach you guys the various strategies that I run. So if you want access to all these trade alerts in real time, the link is down below. We also do private morning live streams every Monday to Friday for about 2 hours, where I trade with you guys live and answer all of your questions on your stocks and your options. If you cannot attend the live streams, they are always recorded, and you can always ask me your questions in our chat rooms all throughout the day, and I'm very quick to respond to those as well. We also do private videos where I showcase many more advanced strategies than the ones that I just showed you right now on the channel. strategies for all types of options, essentially how to grow small accounts into big accounts in a conservative and high win rate fashion, and tons of other psychology videos that our members have been finding tremendous success with in terms of finding the correct trading strategy for them and optimizing one that they may currently have. And lastly as well, you also get access to all of my charts and tools. So anytime that I do chart annotations, anytime that I do support resistance levels, stuff like that, or when I give annotations on the chart like this, you guys get access to all of my watch lists, the options wheel watch list, the large account wheel watch list, the high conviction stock watch list that I don't show that often on the channel here, and so much more, and all the annotations on the chart. So if you want to just copy my charts in the click of a button and have everything that I have on my charts, that is also available to all our Discord members. So the link is down below. Hopefully I see you in there soon if it interests you, and if not, I guess I'll see you back on the channel. So take care, guys. Be a little bit cautious this week, right? And I will see you tomorrow in our Monday market recap. So have a good time this week, guys. Don't worry, we'll all get through this, but as long as we are patient, conservative, and let the market come to us. So take care. That's it for me, guys. Love you guys as always, and peace.